Hey everyone, welcome back to Corporate Decoder, the place where we take a look at what companies are really saying in their official filings. And oh boy, do we have a doozy for you today. Graphjet Technology might be trying to keep their ticker humming, but the SEC filings tell a bit of a different story. Stick around and we'll decode what this means for you. Before we jump in, if you love getting straight talk about company finances and want to know what's really going on behind the scenes, make sure you're subscribed. We also have a fantastic Discord community linked in the description below where we break down these reports further and discuss them live. So what exactly is this report all about? Well, Graphjet Technology is basically telling the world that they got a bit of a lifeline from the Nasdaq Stock Exchange, but it comes with a few very important strings attached. It's like getting a conditional pass in school you're in, but you have to really behave to stay there. The key date here is July 25th, 2025. This is when Graphjet received a decision letter from the Nasdaq hearings panel. Now, this panel is like the gatekeeper for whether a company can keep their shares listed on Nasdaq and therefore easily traded by most investors. The good news for Graphjet is that the Nasdaq panel decided to let them continue their listing. This isn't a victory lap yet though, it's more like a stay of execution. They got a chance to prove they can meet Nasdaq's basic requirements. Let's break down what they need to do. First, they have to fix a problem with their stock price. Nasdaq has a rule that says a company's stock price needs to stay above a certain level, usually $1 for a sustained period. This is called the bid price rule, and Graphjet needs to show they're meeting it by August 29th, 2025. If your stock price is too low, it can signal to investors that the company isn't seen as valuable or stable. Essentially, Nasdaq wants to ensure that companies trading on their exchange have a baseline level of market acceptance and a reasonable stock price that doesn't make them look like they're about to vanish. Next up, they also need to sort out their filings. This is the periodic filing rule. Companies are required to submit certain financial and operational reports to the SEC on time. If they miss these deadlines, it raises serious red flags about transparency and management's ability to keep the business running smoothly. Graphjet has until September 15, 2025 to get this sorted. So not only do they need a decent stock price, but they also need to be upfront and timely with their reporting. And the final condition is about money. They have to tell Nasdaq about their plans to raise more funds by September 30th. This tells us something crucial. Graphjet likely needs more money to operate or to meet these listing requirements. Raising money is common, but needing to specifically show your plan to Nasdaq signals a potential financial squeeze or a need for capital to stabilize operations. Now Graphjet says they will work tirelessly to meet these deadlines, thankfully. But it's important to note the fine print. They themselves admit that there is no guarantee they will succeed. This is a critical point. They are acknowledging the uncertainty themselves. They are facing challenges with basic requirements of being a publicly traded company. The rest of the report is mostly about how they're announcing this news. They mention having a press release dated July 28th, 2025. This is what's called a Regulation FD disclosure, meaning they are making sure this important information is being shared with everyone at the same time, not just select people. They've attached this press release as an exhibit, which is standard practice. Essentially, they confirm the news we just discussed in a separate announcement. Now, this next part is a legal necessity, but it contains some very telling language. It's the cautionary statement about forward-looking statements. This is where companies tell you that their predictions about the future might not actually happen. They list all sorts of words like believe, project, expect, and anticipate. When they say these things, they are trying to protect themselves legally if their future plans don't pan out. And what do they predict might go wrong? Well, they explicitly mentioned the risk that Graphjet will need to raise additional capital to execute its business plans. This confirms our earlier suspicion. They are indeed in a situation where needing more money is a significant concern for their future operations. They also mentioned that this capital might not be available on acceptable terms or at all. That's a pretty stark warning. Think of it like needing to borrow money to pay rent, but not being sure if the bank will even give you a loan. They also very directly state a risk related to Graphjet's ability to return to and maintain compliance with Nasdaq continued listing standards. This is them admitting that staying listed isn't a sure thing and depends heavily on them fixing the issues we talked about earlier. Finally, we get to the signatures. This is where the company leaders officially sign off on the report. It's signed by Chris Lai, their Chief Executive Officer, on July 28th, 2025. This document is their official word to the SEC and the investing public about their situation. So what's the story here? Graphjet Technology is on thin ice with Nasdaq. They've been given a chance to fix major issues with their stock price and their reporting, but success is not guaranteed. The company acknowledges it needs more money and that its ability to stay publicly traded is uncertain. This isn't a report that screams strong, stable company. It's a report of a company fighting to stay afloat in the public markets. They're essentially asking for patience and a chance to prove themselves while facing very real challenges. Their future hinges on their ability to quickly meet Nasdaq's basic rules and secure necessary funding. If they fail on either front, their shares could be delisted, making them much harder for most investors to buy and sell and potentially harming their ability to raise future capital. What's your take on Graphjet's situation? Do you think they can pull off a comeback, or are they already on their way out? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out. And make sure you subscribe for more honest financial breakdowns. And don't forget to join our Discord community, linked in the description for even more in-depth discussions. Thanks for watching. See you next time.